So new all-time high for gold, and that might be even more impressive because the S&P 500 is down 10%. So technical correction. They say gold does better when other things do poorly. Well, other things are doing poorly. At the time of recording, the S&P 500 is down 4.9% year to date. In the same time frame, gold is up 11%. Now, we hear the stock market will always outperform gold over time, and I just showed you how that can be false. You have to specify the time frame if you want to make that kind of statement. Gold outperformed the S&P 500 and the major market indexes in 2024. Gold is outperforming them again this year. Now, let's not get overexcited. I'm not telling you to invest in gold because it's a better performer than the stock market. I'm just telling you that the stock market doesn't always go up and it doesn't always outperform gold. And if we really want to see an even more jittery market, we can peek in on Bitcoin. But again, I'm not here to tell anyone that gold outperforms other investment classes. I'm just going to point out that it's far less volatile. Now, less volatile sounds a little bit like boring, so we're going to start with the chart that you've seen me use before. This is long-term trends comparing gold and silver to the S&P 500 and the Dow. And we can see that gold really is outperforming the markets. I'm not making that up, but this is one of those comparisons where if we don't like the results, well, all we have to do is change the time frame. Now, I started with the popular one. Gold is outperforming the S&P 500 and Dow this century by really a wide margin, but I don't like this comparison because it happens to start at the height of the dot-com bubble for the market and a low for gold. But if you started investing in 2000, this is a legitimate time frame. Let's look at the past 20 years. You can see that gold still leads the S&P and the Dow, but it's getting a little bit closer. Now, I'm not picking specific dates or events to tell a certain story. This is just 20 years. Here is what 10 looks like. We can see that the S&P 500 starts to take the lead, and if we switch then to 5, we will see that the S&P 500 is still ahead. This one does catch an anomaly event though. We caught silver on a big drop, so it's going to look a little bit sexier than typical. So let's switch this up. Let's look at what happened since the beginning of 2024. We can see gold and silver both have been beating the S&P 500 and the Dow. If we just looked at 2024, it would be a gain of 27% for gold compared to the S&P at 23 and the Dow at 13. I know we're probably getting tired of this chart, but one more. This year, gold is up nearly 13%. We're not going to see it on this chart because it's missing a few trading days, but the S&P is down nearly 5%. So if you want to believe that the stock market always wins, that's probably correct more often than it isn't, but you just can't say it's a simple truth. I just showed you it's not true if you look at what's happening now this year. It didn't happen last year, and if you looked at the charts from the turn of the century, it wouldn't look like it's happened at all. Now, none of that is even the important part. We're going to get to that, but first, I need to give a quick shout out to channel sponsor Summit Metals. They have great prices and fast shipping on gold and silver. They're also great people, so be sure to check them out at summitmetals.com. Okay, so we're pushing new all-time highs for gold again right now. We've seen that gold has outperformed the S&P this year. It's outperformed it last year and even this century if we want to be creative. And that all seems really impressive. The important part in all of this, though, is that with all the volatility in the markets, gold seems to be the only stable asset. And over time, that checks out. It's far less volatile than the market itself. That's why it's seen as a safe haven asset. Now, I wasn't going to show a Bitcoin chart, but I had to do it. I'll just mention that Bitcoin is down 25% from its recent highs, down 12.5% for the year. Bitcoin comes up a lot around here. People always want to compare it when it's doing well. Or they want to pick a timeline where it starts from zero, removing the entire concept of risk. There have already been several points this year where if you bought in today, you'd be down 25%. Now, that doesn't mean Bitcoin only goes down. It just means it's volatile. So the more relevant chart right now might be the VIX. And don't worry, I'm not going to try to analyze the markets. I'm just going to mention this because this shows anticipated market volatility. A low score on the VIX shows investors expect stability in the markets. A high score shows uncertainty and fear. Well, the VIX just spiked to 30. And look, the VIX means different things to different people. High volatility is exciting for some out there. For others, it might make them think a recession is coming. But our takeaway here is just that gold's continue to rally while everything else is all over the board is even more impressive than a simple case of its growth. I just said simple case. Well, gold is spiking above $2,970 an ounce. It's well above the all-time high of $2,950. And maybe that's just price exploration, but if you think of gold as a safe haven asset that balances out portfolio turmoil, well, the last few weeks are definitely doing a really good job backing that up. Now, does this mean that you roll all your wealth into gold? No, that's not what I'm saying. At least that's not what I would do. I see it as a balanced chaos, and we can see that both traders and central banks appear to be seeing it that way as well. If you look globally, gold-backed ETFs are seeing their largest inflow since March of 2022 that totals almost 100 tons. That'd be valued at about $9.4 billion. Now look at the central banks. China's central bank raised its gold reserve by 5 tons in February again. It's the 4th straight month of expansion. And Poland increased its gold reserve by 29 tons. That's their largest monthly purchase since June of 2019. So I don't know what's going to happen with the price of gold hour by hour, day by day, but if you look at investor interest, you look at central bank buying, we can see the largest buyers are trying to protect against chaos in other markets. So really, that's the correlation. You could say it's global monetary policy driven by economic weakness, eventually meaning lower rates on falling inflation, but it's probably simpler than that. Gold goes up when things get crazy, and we don't really have a chart for that. But it seems like we still have a little bit of crazy ahead. So let's call it good there. Get back to watching the price. Let us know what you think about $3,000 gold. When do you think we get there? How long do you think it holds? And who knows, by the time this publishes, could already be there. But let us know what you think. And then while you're in the comments, be sure to hit that like button if you found any of this interesting. Be sure you're subscribed with notifications turned on if you want to hear more on the topic. And if you're still here, thanks again for watching. I always appreciate your time. Take care.